Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. Welcome to episode number 16 of the Making Sense of Your Money podcast. I am your host, Dan Pascone. I am the founder of Tailored Wealth. And as you know, each episode features a trusted voice in the financial world, someone who works directly with high-level professionals to simplify the complex and turn strategy into action. And today I'm really excited to have a guest, Joseph Argiro. Joseph is the CEO of Iron Key Capital, and I'm really excited to hear about what Joseph and his team are doing. They run an investment club and really specialize in giving investors access to the private markets, which is something that I am very passionate about. Joseph, thanks so much for joining the Making Sense of Your Money podcast, and I'm pumped to have you today, man.
Amazing. Thanks, Dan, for having me on. Yeah, I'm excited to share, how we can, democratize access to private markets and level the playing field a little bit. So I'm excited to dive in.
Yeah, that's a super cool concept. I'm excited to hear about that as well. So I know that our audience is going to want to hear a lot about the stuff that you're doing, but if you don't mind, just start off by giving us like a 90-second overview of who you are and what you do.
Sure. Yeah, so I have an engineering and finance background. I've worked on Wall Street and in big tech. I would say I'm a founder at heart, more of a founder than an investor. But I worked in product innovation at Hewlett-Packard Enterprise and in wealth management in the private markets at UBS Wealth Management. And that all my past experience really led me to building Iron Key Capital, which is a venture ecosystem to help take a lot of the guesswork out of venture capital and angel investing for experienced professionals who are we're on looking at like the next frontier of their career after say 10, 20 years and kind of thinking about what's next, whether it's as a founder or an investor. So that's really the ecosystem that we've cultivated is a community of professionals and founder curious people with deep domain expertise and really just applying that to create new products and services, in a world where, job stability is kind of a thing of the past. So we just really try to educate people on the ownership mindset of kind of taking control over your own outcomes and thinking about it a little bit differently than kind of the old guard mentality of kind of getting a job and, staying at that job for 20 years and getting a 401k and retiring. I think we all understand that the game has changed now in the last couple of years. So that's really kind of like what the ethos of like why we're building what we're doing.
Yeah, very cool. We have a lot in common in that we both spent time in large organizations and had some corporate background, and then got that entrepreneurial itch, which once you scratch it, you almost can't let it go. I know the feeling. So that's cool, man. I enjoy hearing your story. Tell us a little bit, Joseph, about Iron Key Capital. Tell us a little bit about the people that you serve and what you do for them in that model.
Sure. So we found product market fit, educating top professionals in the tech space, either Web3 professionals or people who work at, I would say, the top FAANG companies, and really teaching them the angel investing skill set. For one of two or both reasons, most of the people that we serve either are an emerging manager and want to launch their own fund one day, and we educate them on the different economic trade-offs of the options that are out there as it relates to investment vehicles. The other is people who want to career transition into venture capital. And we take a long-term time horizon to that and really focus on helping people develop the skill sets and the track record in the private markets and really helping people save a lot of time, energy, and money when it comes to thinking about investing or dabbling in this space deeper.
Yeah, very cool. Very cool. Tell us like a little bit about, you mentioned folks at the FAANG companies. Tell us like a little bit more about like your ideal client above and beyond like their career trajectory, but like what makes them a good fit for you, and what are some of the characteristics you see in the folks that you've served?
Yeah, Thank you for double clicking on that. The people that we serve best are the ones that want some decision control over their capital. So they want to be in an ecosystem that allows them to further refine their own ideas and get exposure to what other smart people are thinking about and working on, so that we create this wisdom of the crowd mentality to make investments together. So I would say the target market that we serve is really more of the active investor rather than the passive. The passive investor is maybe they're trading money for time, right? We're really focused on doing thesis-driven research into various verticals, really at the intersection of Web3 and AI. And through that thesis-driven research, we find companies to invest in or products to build. So I would say really it's for the founder, the long-standing professional that's founder curious, and also from the investment side of the table, people who want some decision control over their capital.
Got it. And then let's take the second profile, like someone that wants some decision control over their capital. What sort of education, what resources, what kind of stuff are you providing for them? And tell us a little bit about like what that roadmap looks like.
Yeah, so we try to create an end-to-end ecosystem for so anyone can start based on their prior knowledge. So we have a self-paced Private Markets 101 training course that anyone can take to kind of learn the basics of private markets if you're starting from square one. We also offer an angel in residence program, which is a cohorts of 5 to 15 people where we have a 12-week training program where we work on real deal flow at the investment club and take an investment from sourcing through diligence all the way up until making an investment, so that people are developing the tactical working skill set of an angel investor, because we believe that people get into venture by doing the job, not applying. So we really just try to give people the education and then also the tool set and the framework for how to be successful in the private markets, regardless of what your goals are, whether it's to be a successful angel investor, get a job in VC, which always makes sense to take a long-term time horizon to that, or becoming an emerging manager in the long run. So any one of those three, or maybe they're overlapping goals, we serve all three.
Very cool. That's a nice background there. That's super clear. And like, I haven't really even heard of anything like what you're offering. Tell us like a little bit about the marketplace and maybe like what's unique about how you help this profile to achieve these outcomes.
Yeah, and I'm glad you asked, and it really started with just solving my own pain points. So the average investor, if you want to get into a high quality company, really at like the seed or Series A stage, if you want to get into a high quality company, for the average angel investor, maybe you're working full time, you have other obligations, right? The only real way to do that is to invest through a syndicate, someone who's leading a deal and pooling capital with other investors. Typically what that looks like is writing a 10K check into a syndicate, which writes a much larger check into the company. So these later stage companies will typically have a 50 or 100K minimum, and the syndicate will pool that capital together and charge carried interest, much like a fund, to facilitate that investment. So, and if you're the average investor, maybe you have 10 grand to put into venture or angel investing a year. Let's just say that's the case for a second. Investing into a syndicate or an SPV is really the only way to do it if you want to get into a high quality company. Now, there are problems with that. The first one is capital efficiency. So the only way to really do this, above board with pooling capital, is to go through an SPV structure, which is capital and operationally inefficient. So you're probably paying, if you're pooling a group of capital, you're probably paying 5 to 15 grand in administrative fees to invest in that. And what we do at our investment club is we've reduced that operational cost to create a portfolio of these investments. Now, the other reason why the old way of getting exposure to this asset class is as outdated is that it's not diversified. You're investing in one company, and that's 92% of the time you're not going to see a dollar of that back. I said you might as well just go to the casino.
Yeah.
So what we offer is a diversified portfolio of high quality seed stage startups in a capital efficient manner. So we're not investing deal by deal and paying 7 grand to AngelList every time we do it.
Right.
We're in a much more operationally and capital efficient structure, both operationally and also from a diversification perspective, right? So you're getting exposure to a diversified portfolio of these companies. So I would say the diversification and the capital efficiency is really is what makes us unique, and that's just what's available to the market today. And this is how this is our structure in response to kind of changing market conditions in the private markets.
Yeah, it makes a lot of sense. It's a very, very cool concept. We talk to a lot of our clients about investing in private markets, and you can define that a lot differently, and each investor has a different sort of aptitude and profile for that. But I am such a believer in, if you just look at the metrics around investing in private markets versus public markets over the last 15 to 20 years, the returns are better in private markets. The volatility is actually lower if you're diversifying than in public markets, which most people don't know. And the amount of public securities is drastically down in the last 15 to 20 years. So there's a lot of real value to be had searching for the right private markets for you. So let's talk a little bit about this industry. Right? Tell me a little bit about where you see the industry going, how you see your firm evolving, and what's your future as you look forward.
Yeah, I'm glad you asked, and especially because I think venture capital specifically, but I think it applies to private markets more broadly, has really undergone some power dynamic shifts, especially in the last 18 months with AI coming out and becoming more widespread. And what this does is it removes the power that these traditional VCs have previously had in the market, because companies don't need $100 million Series C to achieve scale anymore, because you can scale a company a lot more operationally efficient using AI tools. So this takes power away from the VCs, right? And puts it back actually in the hands of the entrepreneur.
Yep, right.
So what we're building is in response to what we call new age venture capital, where actually we're seeing more opportunity and better returns in actually the venture studio space. So we're actually a venture studio of one right now. We build software for our investors. We build software for ourselves. We're our own first customer. So we solve our own problems using software. So that's where the future lies for IronKey, is that we're actually not one company. We're a network of companies that all work synergistically together. So we have a parent company which does education, advisory, and M&A. The reason why we do M&A is that Web3 and AI, the market moves so fast that you could be a venture backable company one day, and then 7 months later, you're a dog. And that's because the market moves so fast. Let's say OpenAI came out with a new feature, and it could kill your whole growth trajectory, right? So what we're seeing is that founders need to be more flexible and revenue focused than ever.
Yep.
You can, and it's this really idea of just being able to hit singles and doubles in the private markets rather than just shooting for unicorns. And that's the VC model. And that's really the power law, is that VCs will only invest if they can get 100x return, because that's what makes sense with their fund economics. Mm-hmm. But if you're not investing in a 2 and 20 fund structure, you have a different set of trade-offs.
Right.
And that's what we're looking to really double click on, is say why the 2 and 20 model is the old model. It's been around for 30, 40 years. Actually, what we're doing, Dan, is we're doing R&D on the 2 and 20 model itself for emerging managers. We're just advocating that for emerging manager as fund one. You can do it as an investment club, because it's charging the carried interest is not the point. The point is to build the track record in the network to launch fund 2, 3, 4, 5 as an emerging manager. So that's how we educate and position ourselves in the market, is that we just advocate for fund one to be an investment club, and we educate people on the economic trade-offs between syndicates, SPVs, investment clubs, and funds, and what are the trade-offs between the three.
Very cool. Very cool. A very interesting concept. Let's talk a little bit about your business and revenue model. Tell us how you connect with the right partners and the right customers for your business.
Yeah, so really right now, a lot of what we do is relationship based, because venture capital has always been a people business. Mm-hmm. It's a who you know business. And what we're trying to do is take the road less traveled and really build a bottoms-up approach to venture capital, serving the average angel investor and emerging manager rather than the needs of, you know, the traditional kind of LP, as you would call it, or limited partner. So that's really where we are and where we started, is by educating the market on the different trade-offs. But really, as we go into the next phase of the business, it becomes a lot more events driven and just trying to create human connection. So creating in-person events, at side events, at conferences, and really just being boots on the ground. And that's really where we see the next leg up in growth for our business, and actually just as a marketing playbook in general, because now everyone has access to cutting edge AI tools. So how do you stand out, right? The analogy I give is that if you think about football in the NFL, now everyone runs a 4.2 40-yard dash. So if everyone runs a 4.2 40-yard dash, how do you stand out? You're probably doing cold email or LinkedIn out. Everyone's doing that now. Yeah. So when everyone goes one way, typically I like to go the other way, and that's in-person events, boots on the ground.
Nice.
And that's really what 2026 holds for us, is that we really want to start connecting with humans on the ground and start to just push the narrative forward on what does new age venture capital look like, and how are the market dynamics changing, and what we're building is all in response to these rapidly changing market conditions for founders and investors, and really trying to focus on the needs of investors. Where I'll leave you with, Dan, is that what we really try to do at the end of the day is we give investors a different set of trade-offs between liquidity, optionality, and diversification. And we do that holistically across all of our companies. Right now, what we solve is diversification at the investment club, right? But we're solving liquidity in the private markets through our R&D innovation engine, through our venture studio.
Yeah.
So we're really taking like a bird's eye view of like, what are the problems that investors have? And really a lot of them come back to liquidity, optionality, and diversification.
Got it. Yeah, I love that. That's a power three right there. I love that. All right, good stuff. We're gonna shift gears now. All right, Joseph. So I never tell our guests about this ahead of time, but we're gonna move into what I call the lightning round. All right, so we're focused on you now. We're gonna stop talking shop for a second and get to know you a little bit better. And so the only premise here is you can give one word answers. You can give us some additional thoughts if you'd like. Just give us, the first thing that comes to your mind.
You got it.
Ready to have some fun?
Yeah, hit me.
All right, cool. Coffee or tea?
Coffee.
Cats or dogs?
Dogs. I like the human connection aspect. The man's best friend. I believe in it.
Yeah, that one. This will be a good one for you. What's one tool or piece of technology, so it could be hardware or software, other than your computer or your phone, that you can't live without?
I would say my AirPods. They're like an extension of my body at this point.
I just tried to start it with the Beats. I'm using the Beats today, and I've enjoyed those. I'm with you on that one, though. Do you have a favorite quote or phrase about money or success?
If you can't find a door, build one. I feel like that's overused, though. So give me a second.
Okay.
We'll edit this part. I'm sure I have a good one somewhere. I just gotta find it in my brain.
We'll come back to it. Favorite book on finance or business?
Platform Revolution.
Oh, I gotta check that one out. Tell us more about that.
So, and I'm biased because this is the background I come from, but the Platform Revolution just talks about the business model innovation of marketplaces in general. So this dates back actually a decade to, Uber, Amazon, Airbnb. It's all a marketplace because it gives power back to the consumer, because now their options, the competition is listed right next to each other. Right. So they're forced to compete on price, right? And I think, and so and Uber for X was, super hot a decade ago. It was actually the first company I built. So marketplace dynamics are near and dear to me. And the next evolution of that is actually crypto, is Web3, is like taking the marketplace business model to like the next level of innovation. And that's just part of what I believe. So that's why the Platform Revolution.
Love it. Give us a personal hack. Could be finance related or otherwise. Give us a hack that you could share with our audience.
The hack that I have in the summer of 2025 is that you don't need nearly as much software as a service as you did 18 months ago. You can operate a lot leaner as a bootstrap business, or really any business, much leaner than you think.
Yeah, good point.
That's the hack, is that SaaS is dying. You don't need as much of it as you think, as long as you can be resourceful. the best resource is being resourceful.
There you go. Love it. Love it. What's one bucket list item that you've already accomplished?
One bucket list item that I've already accomplished is scaling a startup to $1 million in revenue. And that was at me as an early employee. So, yeah.
It's a good one. Congratulations on that. What's one milestone that you're currently working towards? Could be financial or otherwise.
Milestone that I'm working towards is bringing together a lot of these disparate silos into a unified platform or ecosystem to enable founders and investors to work together more efficiently. So that is a big task, and I would say the milestone that I'm shooting for in the next year or two is to consolidate and simplify the journey for founders and investors.
Very cool. Very cool. I love that journey for you. Last one. If you could give one piece of advice to your younger self, what would it be?
Don't try and do too much. As a startup, you have finite time and resources, and there might be a lot of good opportunities, but it's very, very difficult to get to the second opportunity if you don't complete the first one. So I would say just don't let your eyes be bigger than your stomach in terms of spreading yourself too thin, and just focus on doing one thing well, and that will open up doors to the next thing.
Love that. Love that. And then finally, if our listeners want to connect with you, collaborate with you, work with you, what's the best way to reach you?
You can find us at ironkeycapital.com or
Nice.
on Twitter at ironkeycapital. And we're pretty active on LinkedIn and Twitter and YouTube clips from time to time.
Very cool. Very cool. We'll put those notes in the we'll put those in the show notes, I should say. Joseph, thanks so much. This was a ton of fun. I learned a lot. I know our audience will as well. Appreciate you coming on today, man. It's been great having you.
Yeah, no, thanks so much, Dan. I really appreciate getting this message out. Thanks for having me.
You bet. You bet. That's it for our episode. As always, keep your strategy sharp, your goals clear, and your money working as hard as you do. Cheers, everybody.